Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today has been investing in real estate since 2014, starting out flipping houses, and he's now shifted to small multifamily properties. Dan Plant joins us today. Dan, welcome to Purchase to Profits. It's great to have you on the show.
Thanks, Seth. I appreciate it. I look forward to the opportunity to speak to your listeners.
Yeah, pleasure is all mine. So let's kick things off and talk about your real estate goals right now.
Okay. My real estate goals right now entail getting between, it seems like a pretty large delta here, but between 50 and 100 doors under my belt. We're currently at 9. And we started the small multifamily. It's been 2.5 years ago. So not quite as fast as I'd like, but we're continuing to move. We have a 6-unit as well as a 9-unit. The 9 units are spread over three small properties, but kind of in the works right now. Definitely not counting the chickens before the hatch or whatever the saying is, but we've got a couple things going to get us to that goal. The original goal was to get it there by 2021, I believe. Still got some time. We could obviously hit that out of the park with one really good deal, which is, I think, what I'm going to go over later when you ask about the kind of the keystone deal, which inevitably it fell apart. But, with one deal like that, we could reach it. Or I honestly don't mind continuing on with small properties. Everybody podcasts we listen to, they kind of poo-poo on all the really little ones, but I see upsides too. So, however we get there, we get there.
Yeah.
As long as we get there. And try to reduce the burn while we're getting there.
Yeah. And I'm always curious, you said your goal was, let's say, 100 doors or 100 units. What made you choose 100? Was it just because it was a nice round number?
Actually, doing the math, backing into what I was making at the time in my W-2 brought me out to, I want to say 80 some odd doors. And instead of sticking with that, I just said, hey, 100, like you said, is a round number, but there was a little method to that madness.
Yeah.
We've learned a lot since then. We don't get an automatic $150, $200 a door just because we're good guys and we buy a property. Cash flow a month I'm talking about, but so that I think has morphed a little bit, but it's still pretty close to what we would need. And that's if we were to, me and my wife, we've obviously got our team, but it's, when I say we, it's my wife and I. That would be the number that I could walk into my office job tomorrow and they could hand me the pink slip and I could walk out probably with a big smile on my face. There'd be some adjustments, but that's kind of where that comes from.
Yeah. And I mentioned in your quick introduction that you started off flipping houses. So I'm curious,
Yes.
what sort of changes in how you thought about real estate had to occur to make the switch from flipping to the smaller multifamily properties?
Yeah, absolutely. Well, really it started, I just kind of like to work with my hands, but I have an office job, so I don't get to do that much at work. You do as much as you can around the house. And then one day, I don't know if it was HGTV or if the idea just light bulb, I don't know what it was, but I saw a property and I said, man, this looks like a no-brainer. I can buy this for, I think it was 40. And I know the area it was in. I could turn around, put some money into it, sell it for, I believe it was 80. This has been a couple years ago, so don't hold me to those numbers, but it's something like that. And it didn't look like it needed more than 10, 15, 20 max to put into it. So I thought, hey, this is simple. So I went in, did it. I hate to say it because I don't want to make it sound too simple for somebody who hasn't done it, but it wasn't rocket science and it worked. We made a lot, for us, what's a lot of money on that. So we did another one, and it just kind of, if we didn't do a whole bunch, we did a handful of them. And then the progression happened. It wasn't because of a evolution of my thoughts as far as real estate go. It was more because we had our first son, well, our only child at this point, almost 4 now. I was doing a flip house when he was had just come around, and it was just the time. Totally, time was just gone. Plus, that is a job. That's another job. And then every January 1, you're starting that job over again. You're paying the taxes on them. You're doing. We kind of had our last flip house. It was ready to be sold, but it was in the fall, and the market around here where I live in Northeast Indiana, and I don't know if that's the same everywhere, but come fall, winter, things really slow down. And I thought, we put it on the market for, I think, a month. It didn't get a lot of action. So I said, I'm just going to put some outrageous monthly rent number on it. Somehow, we got great renters, they took it. And then all of a sudden, ding, 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 it started going off. And that's where we've gone from there.
Yeah. And so were you always focusing on the smaller multifamily properties, or how did you choose the niche that you're in now?
I have what I would call a mentor. Is one of my buddies, growing up with his stepdad has residential and commercial, and he's always tried talking to commercial, but I always see, well, there's the barrier to entry, higher price tag to get into it, for one. But the other thing is, every time I drive by whether it's a strip mall or an office complex or whatever, and I see that, for sale, not for sale, for lease sign, and it seems like they're in the window forever. I'm in a good area. I mean, the market's hot around here, and it still is. You see them all over the place. And I'm not in a financial position to have a lot of those just sitting out there open. And it's the same thing with residential, but we have never had issues with having a residential property rental unit go unrented unless we're just testing the waters and asking some crazy number. So that's what's put me to the small multifamily. Now, like I said earlier, to say that I'm stuck on small multifamily, that's completely not true either. It's just I listen to a lot of podcasts, and I talk to a lot of people at real estate and whatnot. It's, I'm going to get a 100 unit. I'm going to get a 200 unit complex. I'm going to syndicate this. I'm going to great. I mean, that's awesome, but I don't know. That's I don't know if it's fear. I don't know if it's I just don't understand it enough yet, but that just hasn't really been a huge driver of mine yet. To say I won't evolve into that, that's probably part of the natural progression, but I'm not there yet.
Yeah, and there's tons of people who start off in the smaller properties, and some stay there and build a huge business, and other people move on to those larger commercial units. So, what sort of tips would you give to somebody who's maybe sitting on the fence and they haven't pulled the trigger on their first rental property yet? And do you have any advice?
Call me. I mean, I'm not trying to get business out of somebody. I'm just saying, I'd love to talk about this. I do enjoy the business. It's not just because it's good money. But tips, stick with it. That's a big one. I mean, we had our first property we bought. Hey, I don't want to sound like we have 100 properties. We have 3 small multifamilies adding up to 9 units. And the first one was a triplex we bought, and it took, I don't know, $10,000, a lot of headache, brain damage, all that to get to the point where now I'm seeing every month it's just a beautiful, let's say $600 a month that's just going into my pocket. I'm not really, because we turn around and put it in, do other stuff with it. But that took a solid 1.5 to 2 years of getting the right tenants in there, separating utilities, dealing with the structural issues that I don't like that to deal with, but you know what? That probably got me into that property for a good price because it scared off a lot of people, I'm sure. So you just stick with it. And then another thing is everybody talks about team, and it took me forever to understand that people weren't talking about, hey, I've got all these guys on my payroll. It's not that. I don't have a payroll, right? I mean, but we do. You got to have your good attorney. You got to have your accountant. Luckily, ours is the same guy. Attorney, but you got good brokers, you got all this. It's very important to get those out there.
Yeah, no, 100%. So let's talk about the Keystone deal. So the deal that made a big impact. So which one comes to mind for you?
So we had an opportunity. So I think I mentioned already, I've got a son, he's 3.5, and I read to him every night before bed, and I'm sitting in the recliner my wife, she rounds him up and gets him so where he'll come in, and then he comes in and we read before we put him down to go to sleep. And one night, like it always happens, he was running around, didn't want to come in. So I'm sitting there playing on my phone, just kind of laughing to myself that she has to deal with this. And I pull up MLS of all things, realtor.com. This wasn't even a commercial site. And I see this property. I'm like, this can't be right. It's a 48 unit, about an hour away from me. They wanted 1.5. I believe. And in this area, that's not outrageous. I know you have listeners all over the country where they may say, "Whoa, that can't be." Well, that's not outrageous. That's it's a good deal, but it's not like they're giving it away for the market around here. So I'm reading through it, and I'm like, man, this could make sense. Blah blah blah, and I'm keep reading through it. Have my broker get some more information on it. Find out it comes with 60 some odd self-storage units, and not like an old garage self-storage unit, like a legit. Built as such self-storage complex. Now it had been kind of run down, but that's beautiful. That's what I want. I want that value add. And it was built, and I want to say the 90s. So this could have been the way I did the math. I could have probably value added within let's say 2 years, 3 years, about $500,000, and that's cash out, refinance, that cash going in my pocket, $500,000. It would have played out that way. Who's guess? Everybody's guess. But I didn't have that money. I don't. I got some money, but I didn't have whatever the 25% down would be of that. And so I started the research and talking to people I know that do have money to kind of get going. And my mind was kind of laser focused on I got to get somebody to be my partner that has that money. I'm going to manage the asset. I'm going to turn it around. I'm going to do the value add. I just have to find somebody who's going to be a partner in it. And, then you get into all the SEC rules and stuff like that. But obviously we have to have a lawyer deal with that part of it. But I just didn't have enough experience to be able to figure it out. And so the one guy I was working with that I thought was going to kind of bring that money, or he could have even been the syndicated portion of it, said, this really isn't in my wheelhouse. I'm looking for bigger properties. And good for him. He just closed another big one. But so me, okay, I guess I'm out. And I didn't even get in a letter of, an LOI or anything. That was my next step. Whereas now I've learned that if that under contract, and it also spurred me to spend $5 or $10 whatever it is, on a coaching program through Rod Cleve to kind of teach me that syndicating. I'm not sold that that's where I'm going, but that would close that deal for me. I'm convinced that would close that deal for me. And again, depending on where you are in the world and the country, is $500,000 life changing? Here in Fort Wayne, Indiana, hell yes. $500,000 is going to take you to a new level altogether, depending on what you want to do with that. And that is my biggest lesson: kicking the tail, kicking the teeth, whatever you want to call it. And I'm firmly convinced that if that came across the table today, I would have that closed in 60 days. There's a silver lining. The broker that we use, when I told him, look, I can't close this, he said, well, I got a guy that I think another client might be interested in this. Not sure. Do you mind if I go to him if you're telling me you're out? I said, yeah, and just would like to get some consideration, whether it's monetary or just a part, introductions, stuff like that. And this guy ended up purchasing it, and we haven't closed on any deals, but we've had some conversations. I think I would not be surprised if we do something large in the future together. So I think at the end it's going to play out, but damn it, that hurt.
Yeah. That hurt. Yeah. And I have to throw in Fort Wayne as the center of hockey with the Comets.
Oh, Fort Wayne Comets, love it. I haven't been to them in a couple of years, but man, what a blast. Yeah.
Yeah.
Growing up, every New Year's we would go there. Yep.
Oh yeah. I used to referee in that league. So yeah.
Oh, you did? Okay. I had a buddy that played for the Comets. So I totally understand it. Yep.
Yeah. With that property, I think there's a lot of lessons people can pull from that. The first thing is you recognized right off the bat that you needed a partner who had more experience. I think that's huge because lots of people they see this property, they think they can do it all on their own, but they don't realize that, it takes a couple different skill sets to come together to make these properties really work.
Yeah, absolutely. And, having gone through that, and that's another key that I would tell you. Asked earlier what kind of the little tidbits would be. One nugget to take away is learn from that. I can't remember if it was in the Rich Dad Poor Dad or it was in one of the, the books that everybody's read that had an example of the guys from Texas. When they lose a deal, they love it. Or not love it. Nobody loves it, but they laugh about it. And when they're at the park, with the club or whatever, they're talking about, man, I lost $1 million on this. Take it that way. I learned. I know now. It didn't come out of my pocket. Yeah, I had some costs, but that $500,000 like you're talking about didn't come out of my pocket per se. But I'm not going to realize that either. So that hurts. But I feel like I've learned so much from that disappointment that's not going to happen again. So take every kick in the pants as a learning experience. And that is one of the things I learned was, man, I have these guys lined up for next time. I got this guy. He knows a lot about syndication. So, are we going to do that? I got a guy who just knows flips. Not that I want to get into house flips, but the guy that ended up purchasing a 48 unit was actually just a big house flipper. They do like 70 houses a year in this area. And he's trying to move into some bigger stuff, and he ended up doing that. But so, now I know that team has to. I had said it before. I'm going to get my team in order so when a deal comes across. Well, I never knew that deal was going to come across while I was sitting in the recliner waiting for my kid to come in, so I didn't have it in place.
Yeah.
So, yeah.
Yeah, but on the one hand too, that was the catalyst for you to think bigger, for you to realize what you needed in place for the next deal. So, and I think every investor has had that, I guess, has seen that opportunity where maybe they weren't ready or they weren't thinking about it the right way. And everybody I've ever talked to can kick themselves for one deal that they didn't take advantage of.
Right, absolutely. Now, there's also, something to be said that, if it didn't happen, maybe this is going to turn out better for me in the long run. Because now I've got some other contacts. I've got this, that. So 10 years, who knows? Maybe I'll close a 200-unit property with this guy that I met because I couldn't close a 48, So I don't lose any sleep over it, but you can get my blood boiling a little bit.
We'll get you all fired up.
So.
Yeah. How has getting into real estate changed your life so far?
A lot. Money-wise, I feel more comfortable today than I did before we started this. And I'm not saying because I've made more money. I'm saying because my money's buried in house, in apartment, small multifamily. And it's peeling off, 10, 20% a year, depending on if there's any major malfunctions, I don't see that anywhere else. Now, the market's been pretty hot, so I still have 401k and it's doing pretty good, but I feel much more comfortable that when the shit hits the fan, pardon my French, that my money that's in the equity in my properties is going to be much safer. So a little bit, I don't say it's easier to sleep at night because I don't have enough buried in it that it would, that it would suffice as our total income, but I know we're getting there. So that feels good. And another kind of a mindset thing that I've noticed is when we buy these properties, and this is just a personal thing, when we buy these properties, we get them, have a major capital outlay. We've done them all on our own so far. I mean, some money from like the folks, but from the parents, but paying them back and stuff. But right when we do it, we kind of stretch ourselves to the limits. We make sure we got the rainy day fund and what we need to survive for a couple, however many 6 months if something happens. But when you have a couple days, couple weeks, couple months of that feeling in your body that we're at about the limit of what I'm going to be able to stomach here, And then you start seeing that money coming. And that feeling, that's the best feeling in the world, when it goes from a little bit of timid, a little bit of scared to, wow, I created value here. You know, I made this from, I don't say from nothing, but, and now I've got more money pouring in, and we've made up everything that we poured in. Now I'm off looking for the next one that's going to be even make me more scared. It's almost a high when you realize that you've gotten past that hump. It's just, like I said, it's almost a high. And that's a personal thing. I don't know if other people get that from it, but I do enjoy that.
Yeah. It's like financial skydiving.
Yeah, right? When that parachute opens, it's a great feeling. And when that cash flow starts really pouring in, it's that parachute opening, and you just, or when you touch ground, you know, it's a great feeling.
Yeah, yeah. And so looking ahead, let's say 10 years from now, where do you think you will be in real estate in a decade?
We are going to have over that 100 unit kind of, I don't know if I said this at the beginning. I don't want that to sound like our end game. That's our current goal, our couple of year goal to get us to the next step. To have, you know, generational wealth that I can hand down, that my boy, and if we have any other kids, take her, I don't say take her or leave it, but when they turn 18 or whatever age, they can do stuff with me and, you know, with us, or they could, it's a lot of work to get to this point. So I hope they don't choose this, but selling it so we can pay for college or to do whatever else their dreams, you know, are taking them. That's where we want to get. But specifically in 10 years, I would think we're going to have 100, 150 units. And our thing is, I don't want to get to a point, and this sounds counterintuitive. A lot of people say, I just want to get to the point where I'm a billionaire or whatever the number is. That's, to me, when I hear a lot of these guys talking on these podcasts and stuff, and I'm not judging anybody. This is, everybody's got their own deal. When I hear about how excited people are when they trade in their W-2 for this, well, they turn this into another W-2. Like, talk about all these engagements they have to do and all this, that, and the other that they have to do. It's like, okay, well, now you're on boss. That's great. But you traded one job for another. You're not sitting back and drinking Mai Tais like everybody starts this hoping for you. So maybe that'll evolve, and maybe I'll want 1,000 units someday, but I don't. Right now, that's not even our 100-year goal.
Yeah.
I think that's where we differ a little bit from a lot of people.
Yeah. And well, I think it's so important to look inside yourself and actually really think about what would be important to you whenever you're setting your goals. You know, it's just, you know, pulling out a number from the air doesn't do anything. You actually have to, you know, take some time and think about it, right?
Yes, absolutely. What is that goal? And you can tie, it's fairly easy to tie money to a goal, because you can say, okay, I want to live free on my own. I want to have a yacht, whatever. Well, that costs X. I'm making X cash flow per month on how many doors do I need? You know, so it's easy to work that back. But the goal should not be the dollar amount. It should be your internal goal.
Yeah. No, that's a good point. So Dan, if somebody's looking to reach out and get in touch with you, where can they find you?
Yeah, you can email us. It's just Plant Property Group. That's my last name, Plant, P-L-A-N-T, Property Group @gmail.com. They can call me. It's 260-750-3541. Whatever, you know, I can't count how many coffees or drinks, lunches have gone out and had with people I've never even met before, just because we met them on some online thing or something, and it turns into something valuable for one reason or another, whether it's money in the pocket or you learn something from them. You know, I'm always willing to do that. Or if somebody's looking for boots on the ground in the northern Indiana, even down to Indianapolis area, think of me. You know, can't promise anything, but I promise. I think we probably have aligned interests.
Yeah. No, that's great. Well, Dan, just want to say thanks so much for taking the time today and sharing those successes and stories with us.
Absolutely. I know I don't have the successes that a lot of your interviewees have had, but hopefully this can add something to somebody. So I
Oh,
appreciate it.
100%. And the really cool thing about interviewing all the different guests is everybody's different. Everybody's at different levels. We've got people starting out. We've got people who have been in the business for 40 years. And every single guest has something to add, right? So it's really cool. Just want to say thanks again. And to you, our reviewers, I wish you well on your journey from purchase to profits. See you next time.